and Network 18.
Welcome back. You're still tuned into Markets Today on CNBC TV 18. Let's go across to the next of the headlines that we are tracking for you. To the fourth headline now, Reliance Industries ended the day over 1% higher after a Morgan Stanley report, which raised the target on the stock, said that it was a top pick in the sector and a lot more. Sonia Shenoy is here with all those details. Hey, Sonia.
So at the onset, let me say that Morgan Stanley was in any case bullish on Reliance Industries, but now they have named it the top pick in the sector and they have raised their target price on Reliance Industries to 3,085, which is much above the current market price. They believe that the fourth investment that Reliance Industries has made to the tune of $50 billion over the next 3 years. The progress is very firm on that. The investments have been made across all their verticals, whether it is chemicals, 5G, retail and new energy. And because of this investment, the company's earnings are expected to double by 2027. Not just that, Morgan Stanley has also said that this time around, the investment looks more feasible and it's supported by a 1.5 to 2 times operating cash flow and EBITDA compared to last time. So that gives them incremental confidence in both the investment cycle as well as the stock for the longer term. Back to you.
Okay, all right. Sonia, thank you so much for joining us with all those details. Moving on now to the fifth headline of the day. Federal Bank ended 3% higher after analysts said that a Kotak acquisition of Federal Bank was unlikely. What does it mean for the stock? Abhishek Kothari is here with the details.
Well, yes, I spoke to various analysts. They say that, why Federal Bank acquisition by Kotak Mahindra Bank is unlikely, given the fact that, first one is that for any potential acquirer, there needs to be a promoter with more than 20% stake who is willing to sell his stake. So looking at Federal Bank shareholding, there are no promoters over there and no one holds more than 10%. So a consortium of 2 to 3 funds have to come in together in order to sell or make the acquirer have 20% stake in the bank. Second point that analysts do mention is that for an existing banking players, acquisition of branches are no more, a large value add in their acquisition. So as RBI has already made branch opening much simpler and easier. So Kotak has always been on the prowl for an acquisition, but at its own price. So they say that nothing has changed in Federal Bank over the last 6 months, which can catalyze to an acquisition of the bank by Kotak Mahindra Bank. Back to you.
Okay, that is about Federal Bank, ended 3.5% higher in trade today. But what did not do so well was ABB. Fell over 2% after Credit Suisse downgraded the stock. But a recent rally and elevated valuation also weighed in. Nimesh Shah is here with all those details. Nimesh.
So it's a combination of both the stock rallying pretty hard and a large outperformer in the capital goods space, as well as elevated valuation. So on back of this, Credit Suisse has today downgraded ABB to underperform from neutral, and they've retained the target price of 2,600. Again, a meaningful downside from current levels. Now, as I said, ABB has been a rank outperformer. The stock has rallied over 70% in the last 1 year. Even in the last 6 odd months, the stock has rallied between 30 to 50%. So it's been a big move in that particular stock. While Credit Suisse is quite bullish and they see evidence of investment cycle picking up, but as far as ABB is concerned, after the big move, the stock is now trading at over 70 times FY24 price to earnings, and much of the expectations are in the price. So that's the key reason. Even on DCF, it seems at current valuations it implies a 20% CAGR growth for the next 20 years, with the highest ever record margins of 12.5%. So on elevated valuations and the fact that the stock has run up so hard, they have underperformed now ABB to underperform. While they're bullish on the capital goods space, the top pick remains L&T, where they're overweight on, and they still prefer Siemens over ABB purely from a valuation point of view. So the key reason for the downgrade is largely a big rally and the fact that valuations are very expensive now on ABB.
Well, thank you for that. But Nimesh, stay on. We also have diagnostic players which were in focus today. Dr. Lal Path Labs, Metropolis Healthcare. They were trading in red today after a brokerage note from Antique. They initiated a sell rating on the two stocks. Take us through the details.
As you rightly pointed out, both the stocks are under pressure on the back of the Antique note. On Dr. Lal, they have initiated with a sell rating and a target price of 1643, a potential 30% discount even after today's fall of 3%. On Metropolis, they have a target price of 1232, which also indicates a downfall of between 10 to 12% even from current levels. Now, the key reason why they have a negative rating on both these stocks, one of course is increased competition, and two, the COVID-led tailwinds are now behind. So the entire sector now is looking for a scenario of a lower CAGR. In fact, Antique says that the margins which all these companies reported in FY21 is unlikely to be repeated anytime soon, and they will revert back to the average of around 10-12% growth versus the 15% plus CAGR which these companies reported in the last few years. Even in terms of return on capital employed, it will go back to close to 25-26% versus the pre-pandemic levels of around 33%. So the entire sector is likely to be derated purely on valuations, and hence on back of that they have a sell rating on both Dr. Lal as well as in Metropolis.
Valuations headwind for the diagnostic sector. Nimesh, thanks a lot for joining us. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.